Good afternoon, everybody. We're having a special Sunday session today, stock hunting with yours truly, Gil. I'm sure you all recognize my voice. I hope everybody, at least in the U.S., among our U.S. subscribers, had a great Thanksgiving. I know I did. I think I'm still getting to the point where blood is now starting to leave my stomach, where I've been digesting food for the last several days, and is now migrating back up to my head. Anyways, everybody let me know whether you can hear me okay and see the screen just fine. You can see the futures have just opened up, so we're starting down a little bit. Okay. So let's just start out a couple of things, just some basic index charts here. You can see the Nasdaq has been rising, continuing to rise even after the steep move higher. I know a lot of people, as we were coming up to the 50-day, everybody kept saying, oh, we've got to consolidate, the market's got to pull back, test the 200-day moving average down here. But you never saw that. Thing just kept on going. And for the most part, you've seen, I think, a mixed bag among leading stocks and former leading stocks, because we have been seeing stocks breaking down pretty severely, even as we're seeing other stocks perform pretty well. But in the meantime, my basic approach to the market is looking for names where I can find something that has a lot of dynamism to it and the potential for a big move to the upside. So looking around at the market right now, it's hard for me to find those places. You know, there were some promising areas, names like Rewalk and Mobileye and Gopro, and some of those names look like they had some upside from here, but they haven't really been able to get going and have broken down, as in the case of Mobileye. Whereas you're getting other names like Palo Alto Networks are acting okay. Baba is hanging in there okay. So it's really a mixed bag. And what you'll find is that you see the Nasdaq Composite chart here. I'm using a daily candlestick, which shows you as we're moving higher here over the past week. I thought the rally over the Thanksgiving week was a little bit suspect, and that was one of the reasons we didn't want to have a webinar, because we kind of felt it was sort of nondescript, and the market's probably going to edge higher. Whether you're able to make some big money during the week is entirely dependent on what stock you're in. So if you're in Palo Alto Networks and held through earnings, or got tricky like I did and bought the thing on the pullback after earnings, an after-hours trade, you got a nice 10% move from there. But my guess is we're going to pull back. I'm watching the futures coming off now, minus 1750 on the Nasdaq and minus 875, 850 on the S&P futures. Pretty interesting. But this is sort of what I was looking for, and that's one of the reasons I scheduled this for 3 p.m. my time, which is when futures open up, and we can see this right here. So there's a little bit of a real-time aspect in today's webinar. So you're seeing these things come off. Not sure what's driving it, if anything, but I do think what you're seeing on the index is, if we get back to the chart, as we moved higher here, this is a down day on last Friday on heavy volume, and then you 2 days later on Tuesday of last week, you churned on heavier volume. You can see that higher volume here. You're churning here, a little spinning top, and then you move higher again on Wednesday, the day before Thanksgiving, which is, I don't think I've ever seen the market down on the day before Thanksgiving. The day after is another story, but the day before, there's really not too much going on. Nobody really has an incentive to sell unless there's some sort of news impetus. And so the thing moves higher on lighter volume. And I know it's holiday volume, but there's still a pattern of higher volume on these down days and on this churning day on Tuesday right here. And then finally on Friday, this is actually about half of average volume on a half day of trading, which you could extrapolate to being higher than this volume bar here. So I sort of see this as churning up here, and I think the market's probably going to start the week out, or start December out coming in a little bit. If we look at the, let's look at another chart here, the broader market on the S&P 1500 index, and this is a special index that you only find on HGS Investor Software, which is what I'm using here. This is my cash register, as I refer to it. And I think anybody who learns how to use this system, however you're using it, you just learn how to use it based on the sort of things you're looking for. I think it's very, David, a lot better than something, say, like MarketSmith. which is all built around a particular methodology, whereas HTS Investor software is not built around any particular methodology like CanSlim. You can use this and tailor it to whatever methodology you want to use. If it's a variant of CanSlim or some sort of high-velocity short-term trading using typical growth names with a lot of upside momentum and potential, like the Gopros, the Blabas, and whatnot. So you can see that even though the market has been going higher last week, it really was going flat on a broader basis. So the S&P 1500 index is a very broad index, and this these spikes here are spikes in the advanced decline line. So green bars with these spikes are where you have advanced decline is more than 5 to 1 or 5 to 1 or better, and then the rose bars are where it's 1 to 5. And what you notice here is that you've had some big spikes in October as we came up off the lows, and now it's all starting to simmer down, similar to what it did back in September, as you had some spikes in here, and then it started to simmer down, and then the market rolled over. And I think you might be in a similar position here, at least as far as the indexes go. When it comes to individual stocks, I think it can be a different story, as you guys know. Somebody's saying it just lost the sound. That might be your own internet. Everybody can hear me just fine, right? Yes, there's a yes, 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 yes. Yeah, I mean, most of the time when that happens, it's your own internet. I mean, I think there's still a lot of areas where internet service is not as good as it could be in other areas where it's stronger. So I think depending on where you are, it's more a function of your own internet service. So you can see what I'm seeing here is a market that is primarily being led by the Nasdaq 100, which has been moving higher at least in the Nasdaq market, and the broader S&P 1500 is showing you that we're kind of flat. So not a lot of excitement, and you can kind of get a sense of that, I think, with the individual stocks. So what we're going to do is we're going to look at some of the names that I've been picking out this weekend as I've been running my screens. And again, what I note is that there isn't a lot of exciting stuff setting up here. You have some stocks that I refer to as inchworm type stocks that have been moving and trending higher, such as the airlines, which let's see, such as Southwest Air. These gapped up on Friday when oil took a plunge to lower lows. It gapped down to lower lows. And all of these moved higher. Every name in the airline sector, along with some truckers and retailers, also were doing well, because the theory is that lower oil prices are good for the consumer, who will have more money to spend on presents for Christmas and Hanukkah and whatnot, and not have to spend so much on gas. Of course, if you're in the oil sector, oil has been coming down for a while, so this is no big secret. If you look at this on a longer term basis, you can see since the middle of the year, oil has been in a bear market. And I noticed on Friday, a lot of the commentators were talking about oil is in a bear market now. And I was thinking to myself, well, what do you mean now? I mean, where you been for the last 6 months or so? It's been in a bear market for a while, and we have seen a number of oil stocks just continue to break down. And for those of you who follow the webinars in real time, for the last 3 weeks or so, we've been focusing on Silica Holdings as a short sale target because of the fact that you are set up in a left shoulder, a big head here, and a right shoulder. And you have this little shake-up, which is really, if you think about it, turn this upside down and you get a cup with handle, an upside down or inverted cup with handle. So this moved back down just below the 20-day. If you turn it upside down and looked at it in a mirror, it would look like a cup with handle where you have a pullback in the handle and you're getting some support off the lows on these 3 days. And so what happens here, those simply become short sale points right around the 20-day, and you blast through the, if you draw a line along these lows, you blast through that neckline of sorts, and you're gapping down. Now, if you were alert on Friday, you would have noticed the gap down, or you could even hit it on Wednesday when you had a gap down on heavier volume, and you see You see the thing starting out, I think it opened at 38.10, and so immediately it started moving down from there, and so you could pretty much figure that that was going to be the high of the day. You use that as your stop, and you could have shorted it there. But you can see this on a weekly chart. Here's the big head and shoulders formation right there, almost textbook, and now you're breaking down. I think, though, coming down into this structure, you might be near a point where you'd want to cover it if you're short it, and I think maybe it undercuts this low, but I'm not going to be a pig, because if you're short it from up here, you made about, let me take a look at exactly what the percentage was on that. 25% on the day. So, that's often my 25-30% my maximum profit objective, so I think that was pretty decent for the day. And there's also related names such as Greenbrier, which makes the rail cars, and of course they were all, here we go. I'm not sure why this thing's so slow, but you can see the head and shoulders that was setting up prior to Friday's news, and you can see the wedging rally just above the 10-week moving average. You see a little bit of stalling here on this week if I blow this up. But as you're looking around for shortable patterns, you need to be cognizant of these things that are setting up. And I was watching Greenbrier, but I can't borrow it, so even as it was coming up here, it looked like it was shortable. But if you anticipated this, now you've broken below the line. If we take a look at this on the daily chart, you can see the breakdown. So this would be your left shoulder. You might even consider this a left shoulder on the daily on a fractal basis, and this becomes your big head. And now you got a couple of right shoulders, and you've blown through the 50-day and the 200-day. Now, you see this, of course, and you're going to get all excited, and you want to short it here, but I'm not so sure that's the smart thing to do. You've undercut this low, so I would be looking for some kind of rally. Maybe it carries just above the 200-day moving average. And the other thing you should be wary of, I think, is the fact that if oil's been coming down so long for the last 6 months, and you've got it's a gap down at the end of a long downside move, then you could be in an exhaustive phase. And there's always a potential that that's what this is. This isn't necessarily going to lead to a lot further downside. So you have to be wary of that. And if that happens, then you might see some of these names snap back up to the upside. Let's look at a few other names in the group. Trinity Industries, almost the same sort of pattern. You can see a big head. Again, there's the classic breakdown here at the head, and then you've got the right shoulder, which is really, if you look at it, sort of a bear flag where you're pulling back into the upper parts of the bear flag. And it breaks down from there, but it hasn't actually pushed out to lower lows on the daily chart. So you can see it's finding some support. But those are names that are just getting pummeled on Friday. And you also saw the rails. This thing's a little slow. I'm not sure why it's doing that. But this is so typical for this market. Here you have a stock, shakeout. It breaks down to the 200-day, violates the 50-day. So if you had bought it in here somewhere, you would have sold it probably. And then you bounce off the 200-day moving average, and you move to new highs, and you just continue trucking higher, and you break hard here on the news, and now a couple 3 weeks worth of gains have disappeared in one day, and you saw that across the board. So Union Pacific was one of them. You also had Norfolk Southern. Getting whacked and right back to the breakout point. CSX. Somebody's also pointing out Sanchez Energy, SN, Bonanza Creek, BCEI. I mean, the whole sector has just been pummeled. And you have to ask yourself, with oil dropping like this, the conventional wisdom is that, oh, this is good for the consumer, and it's a tax cut for businesses, and yeah, that's true, but if you also consider the fact that the oil industry with the fracking boom has driven a lot of employment in an otherwise weak economy where you haven't seen a lot of employment. You got areas of the country that have been booming and showing big jobs growth as a result of the fracking boom. Now if the price of oil stabilizes at a point where high-cost producers are not really profitable, then they're going to start laying people off. And I think that could be an issue for the economy. And you see that it affects things like the railroads as well and the related industries. We saw Century Aluminum, which actually had a nice breakout last week. I think it was on Tuesday. Let's pull this one up. You see a nice cup with handle breakout here, and the thing fails immediately. And they provide aluminum to a number of industries, one of them being the oil industry. And I guess BHP Billiton is a big customer of theirs, and so that's why they got hit. Now, I don't know if this puts it back in a position where you might look at buying the stock here, trying to be opportunistic and keeping a tight stop. In this market, if I'm looking at something on the long side, I prefer to be buying things on weakness and not so much buying into strength. So I don't really like to buy breakouts like this. I'd rather look for a pocket pivot and then buy into the weakness. I'll give you an example of a trade that worked out pretty well last week. Is this Bit Auto, which broke out. Of course, no velocity after that, though. You have nice velocity on the breakout, but then it just sort of drifts into the 10-day right on top of the handle and comes out again, breaks out to new highs, and then reverses there. Volume wasn't very heavy, but still you can see that you're better off trying to buy the pullbacks than you are trying to come after the strength and buying the breakout. So I think that makes things a lot less risky if you can find a pullback where you're coming into a point where it should hold, and if it doesn't, you have a very tight stop rather than using what I consider the silly 7-8% rule and trying to keep things tight on the basis of the chart pattern and the moving averages and the points of reference for support for that particular stock, rather than just some sort of rote rule that most breakouts don't fall more than 7-8%. If you've been trading for a while, especially in a QE market, you'll know that that's a bunch of baloney. Stocks can fall a lot more than that, and then they'll turn around and go back higher. And so you're better off trying to use a point of reference like the top of a prior base or moving average. Somebody making some comments. The Saudis are keeping output up to put it to the frackers. Well, that's what they're trying to do. But how long they can actually manipulate the market is another question. And I think it's really an issue of where does this settle down? Do we settle down? I think that's 60, 55, 70. Where exactly do we settle down? I think that's going to determine a lot. And as I said, with the oil industry driving a lot of employment growth in this economy, you have to wonder whether that's going to have some sort of impact. Anyways, let's go through my buy list here. And this is, I keep a list of names that I'm watching, and here's Avenir Pharmaceutical. I guess that's how you pronounce it. But this stock has had a pretty nice move. I'm not sure if we put a report on this down here when I had a pocket pivot, but I've been watching this for a while. I've traded it a couple of times, and it's reversing off the peak, so that's extended. So that's not something I'm really going to buy. Alexion is hanging in there. Just building a base, and you're going code blue here, so it looks okay, but I'm a little wary of the biotechs. I know Celgene is holding up, and Alexion is holding up, and there's a whole slew of other biotechs that are doing okay, like the Agios, and also Avenir Pharmaceuticals is another one. And I think the group is number 4 or 5 among all industry groups, so it's holding in there, but I'm still a little wary of it up here. Because you look at something like a Celgene, for example, on a weekly chart, and it's had a pretty decent move from here, and a couple of bases. Now we're moving to a new high coming off of a flag formation, but there's not a lot of volume as you're coming out of here, so a little bit wary of that. And meanwhile, you've had Biogen and Gilead break down. So Alibaba remains one of my favorite long names. If I'm going to play this market long, and if they're going to push it into year-end, I got to think that they're going to take Alibaba with it. The last quarter's reports, I guess 13Fs, 13Ds, whatever, that the big funds file shows that a lot of hedge funds piled into Alibaba, and a lot of them have been underperforming, so it would not surprise me to see them try to push this one higher. What you can see here, though, is as we're pulling back, the pocket pivots down here, that's a great move, 20, 25, 30%, wherever you jumped in here, or even here on this pullback on the day of earnings, which was a very opportune entry point, I thought, and you got a nice 20% move from there over the next 5 days. Now you're pulling in, you notice you're holding along the 10-day. Now this is a 20-day exponential moving average. If you use a 20-day simple, you might notice that the stock is actually pulled down to the 20-day simple moving average, which is a little bit higher than the exponential. This 10-day is a simple. But to me, again, as Dr. K likes to put it, the way I look at moving averages, they're quantized. In other words, they're fuzzy zones. So, you could look at fuzzy zone around the 20-day exponential here, and it's coming into that fuzzy zone now with volume drawing up. So this is sort of setting up on the pullback. You want to watch how this acts. If we open down tomorrow, I'm watching the futures now. S&P, at least the minis, down 775. The Nasdaq minis down 1425 right now. So it looks like we got a little bit of a down opening tomorrow if this holds. But again, we'll see. I've seen a lot of Sundays where you start down or up, and then the next morning you're going in entirely the opposite direction. So I wouldn't really put a lot of stock into what's happening right now. But if this gets worse throughout the evening, then I think we're coming down some more in the morning, and it would make sense to me. But somebody said, but you might see BIDA as a cup and handle just now breaking out. Yeah, I didn't say that it wasn't. It is a cup with handle breaking out. Here's the cup with handle. Let's just shrink this down a little bit. This is the thing I really like about HCSI is that you can shrink things down very quickly to get a long view. You can expand them to get a close-up view, or whatever you want to do. And you can see this is actually a cup with handle. You broke out of the handle. Now, is the handle in the midpoint, or is it below the midpoint? And does that matter? Is this a late-stage base, given the huge move that the stock has already had? Does the 100 price level become the Livermore century mark rule in reverse? So in other words, does this thing fail to get above the 100 level, at which point that can be seen as a barrier at which you would short the stock? And so I'd watch this one over the next few days. I don't think it's something I want to buy because I think it's already had a big move, and I think it's a little bit too obvious. So not really my thing. Headline from National Retail Federation, Black Friday turns red as sales plunge. So that might be what's driving the futures this morning, or not this morning, this afternoon. If that's the case, I actually wasn't expecting the retail situation to be so hot. I actually went out on Friday after the market closed and surveyed some shopping centers. There weren't that many people out there. I was at one shopping center down in Orange County. I think it's called Terabella, right in Fountain Valley, right off the 405 freeway, anybody who lives out that way. And I was shocked that they had a Christmas show going on with a big Christmas tree and carolers and whatnot, and Old St. Nick, I guess the traditional Old St. Nick, who isn't all red and white. He's more got some darker colors in there, but he was roaming around, and there was hardly anybody there. It wasn't really crowded at all. And I was a little bit surprised at that. So I think we were in a toy store, and we were the only people in the toy store. Anyways, let's see. So yeah, this is a cup with handle breakout. So, but if you want to play it, you buy it on weakness, and then you use that as your stop. If it fails through the top of this handle, then you're gone, and you should be gone immediately. Let's go back to my buy list, and I'm going to wing through these. Amazon is actually on my buy list. Okay, what's going on here? HCSI is freaking out on me. It's also on my short sale list, but I'm not really sure what this thing's doing. You could actually trade it coming up through the 50-day moving average. You consider that a pocket pivot move, and then another move, but it's not a pocket pivot move going up to the 200-day. Now you're sort of up here, and you're near this high, so I'm wondering if this is going to turn into a short. And if we're going to play on this theme now that we know this news from the Retail Federation or National Retail Federation that Black Friday sales were pretty weak, then maybe Amazon, does Amazon benefit for that, or is that bad for them? In which case, does this become a top and a bigger right shoulder where you have this sort of fractal head and shoulders? Let's take a look at this on a weekly chart. We're actually getting some pretty heavy rain here right now in LA, here along the coast. If we look at this, we can see the initial head and shoulders in Amazon, and it broke down through the neckline here. There's a neckline. I'm going back and forth across it here, and you break down. Then you rally back up into this area. Now you form this other head and shoulder. You see this? Left shoulder, big pinhead type head, and then the right shoulder. Now another right shoulder. And notice it's on the weekly volume you are sort of wedging higher, and you're getting closer into this area, which I think is where you might see some resistance. So I'd be watching this. This could become a short again. But for now, because it's been acting well, I'll keep it on my buy list and my short list. Somebody else points out, I'm in the New York City area, mall's not that crowded. And another person in Chicago says, I was on the Mag Mile, I guess that's the Magnificent Mile, in Chicago on Friday, not real packed with shoppers. Yeah, I mean, I don't think people have that much money to spend, to tell you the truth. I know I do, but I'm not spending a lot. I do all my shopping online, and I'm cheap. So anyways, yeah, we're getting a pretty good storm now. Wonder what happened to our drought. All the global warming fervent religious global warming followers are kind of getting a loop thrown at them now. I was reading yesterday that Florida hasn't had a hurricane make landfall in 9 years. So much for climate disruption. Anyways, Farmer's Almanac says that we're going to have heavy rains in California this year, and so far we've started out with a couple of good storms. This is the second one. So anyways, someone else says same here in Orlando. But someone else says Obama says everything is getting better. Let's see. In Alabama, everybody was watching football. Okay, so we're getting different regions of the country sort of reporting similar sorts of things. That you're not seeing the kind of shopping exodus that you might expect to see on Black Friday, and that's why the numbers are probably bad. Anyways, but yeah, this is the sort of thing I'd be watching for. It might start to roll over, and you might try testing a short in here if you think this is going to roll back over, but I'd sort of wait and see if it drops below the 200-day. Then I got some sort of reference point. But if you're really a swashbuckling trader, you can go after it here, I suppose. It's really coming down now. Let's hope the internet stays up here. Let's see. Just going to continue through this. Apple continues to go higher. I have to admit, I really missed this. I didn't think this thing was going to make it out of here based on some of the action I was seeing in here, all this selling. But you've just continued to move higher on really no volume, which makes this a little bit suspect. But you did have a pocket pivot off the 10-day moving average here, a continuation pocket pivot. So that's acted pretty well. But that's the type of name that's been driving this market. Here's this Avenir Pharmaceuticals, which is really what I would call an inchworm type stock. Well, what happened there? Here we go. It's kind of pinching higher, but not much else going on. Baidu is sitting in a base, but are you going to buy this one? I don't know. I don't see anything here. It's an old name. It's a tired old name. I don't really see anything here that gets me excited. And as we go through this, my whole point here is going to be that there isn't a lot that gets me excited on the long side. Now, there are a few things that get me excited on the short side, but we'll get to that, and we've looked at a couple of them already. But here's this one, BioMarin. I thought this interesting at a pocket pivot here. I mentioned that Dr. K, I don't think that he sent a report on it, and I wasn't really sure about it. But it's up there, too, and so I think there's some danger. Here's this Catalent. I was talking about this in the chat room back in October, but it tried to break out and fails, of course. And here's the ugly duckling theory in force here. This thing comes out, and you don't really have any volume on the upside. There is no real pocket pivot anywhere, but it continues going higher. And Cavium, which is trying to hang in there. Somebody says maybe we'll get an answer on Amazon tomorrow after Cyber Monday. That's a good point. I would keep an eye on that, and we'll see what happens. Maybe it takes it until Tuesday. But you do notice a little stalling on the pattern. Here's another one, Cavium. You know, when they broke down the semis, I forget which semiconductor company it was that said everything was terrible and their orders are shrinking, whatever, and the thing turns right around and goes back up to the highs. I would not be buying this here. I'm not interested in this, but I do put it on my list because it is moving higher. Celgene, same thing. You notice how you're just wedging higher on no volume? Look at that. There's no volume there, and it just keeps drifting higher. Money's pushing into it. I would watch this one because I think it is going to come in, but when it does, I think that's when you see Biogen and Gilead probably break further to the downside. This China mobile games and entertainment is interesting. There's not really enough for a pocket pivot, but a weird, reversal. Of course, it's had some scandals where some of the executives in the company were taking bribes. CMG can't make up its mind whether it's a long or a short. You can see here you're reversing off of the highs here, so maybe this is a spot where you can short it. I've tried to hit this thing, and it just never wants to break down. It did try to here, but then we reversed back to the upside. Now it's back up in here. And the retail restaurant area has been strong. You've seen some names like Buffalo Wild Wings, even Burger King Worldwide, which I have to admit, in addition to getting a hankering for a fillet of fish every once in a while, I sometimes get a hankering for a Whopper. Here's CyberArk. Now, the security group, network and internet software security group has been the #1 group, and of course Palo Alto Networks is leading it, but there's a couple others like Vasko Data Security, I think it's called, is another one that's been doing well. But here we see cyber trying to go higher. It reverses here. You got 3 firms all at once downgraded the stock, okay? So now what you've done is you've undercut the lows of this little flag here that it tried to break out of, and you're coming down into the 20-day, which is not too far away from the intraday low of the gap up day here. So I'm watching this as it comes in. Notice volume dried up. That was Friday, though, so we'll see what happens coming into next week or going into next week. See how the volume acts as it comes into the 20-day moving average. But again, this sort of points out to why if I buy something, if I buy the gap here, I sell into the move up, and then buy on the pullback and sell into the move up, and then look again to buy into the pullback. That's just the way I've been operating in this market, and it seems to work well because nothing seems to trend for that long, and the things that do trend, they seem very rare and far and few between. Let's see. We'll get to some of these names you're asking about. Electronic Arts I've had on my list. This one and Take-Two my son has been telling me I have to buy, and he actually suggested them in here in these flags, and they are inching higher. I mean, these are inchworm stocks. Take-Two's looking okay too. Expedia, online travel. Come on now. Yeah, nothing really going on there. F5 Networks, this is another one that has tried to break out and has not gone anywhere. So give the chart some time to kick in here. Yeah, it's been a while since I've heard rain that hard coming down. They're expecting 3 inches coming in, which is a fair amount for Southern California. But so much for the drop. But you can see F5 here's a cup with handle breakout here, and it's really going nowhere. So it's an inchworm stock, as I call it. Now Facebook, I was heavy short in here on Facebook coming into the last week on Monday, and I ended up covering pretty quickly on this turn because this actually turned into a pocket pivot right here off of the 10-day and the 20-day. And if you're really flexible and fast, you could have flipped from short to long on that. But I figured it was either going to break down or try and turn back up, and that's what it did. You got the pocket pivot here, you just get out of the way. Now it's back up in here, and this is not very unusual. If the thing doesn't break down from this bear flag, the reason it doesn't generally is because the general market is holding up, and that was what has been going on as the indexes have moved to new highs. And so it tries to scoot higher. Money wants to come into something, anything, to get involved in the upside movement that investors are seeing in the indexes. And so it's what I call desperation play. They come in because it looks cheap, and they run it up a little bit, but it stalls up here at the peak. Notice the volume, while it's pocket pivot volume, you're not really seeing any heavy upside volume. So I'm just kind of watching this. You could have got a nice trade for a couple, $3, a Skrilla trade, as you might say in the chat room, and you're stalling out here, and we'll see if we come back in with this. Fiat Chrysler, interesting name, holding along the 10-day. I just got it on my buy list because I'm watching it. Futures bouncing around. We're down 1075 on the Nasdaq minis. Excuse me, 650 on the S&P minis. Here's Fleet Core, which had a nice viable gap up here, but notice how that didn't go anywhere. And if you're using Dr. K's 6-day rule, you probably would have sold in here, right at the lows of the flag, and then it turns to new highs, and now it gets jammed right back to the inside, and it's not looking so good over here. You got a negative kahuna, I believe that's what it is, or eureka, or whatever it is. No, that's a down kahuna. Now here's GoPro. Some of you are asking about GoPro. Is that a trade, a Christmas trade, because everybody's going to buy a GoPro camera? I don't know. I don't really know what to think here. This sort of reversal gap down on heavy volume on the secondary issuance. I think there's still some stock out there that needs to be absorbed. And so you had a nice move. Notice how this thing will violate the 50-day moving average. It did it here and did it here, but it holds a 65-day exponential moving average, which again proves that it is a magic moving average and one that the crowd never looks at. And you find a lot of stocks that either for which that moving average represents support or resistance, depending on which way the trend's going. But for the most part, GoPro's trying to base. But things are starting to look pretty grim here. The bongo's turning red, the weekly bongo. That's generally not a good sign. And you just get a couple, 3 days of this positive force index on the 2-day force index. And that doesn't strike me as being all that exciting. And I don't see a setup here. I'd like to see this thing drifting into a moving average on light volume rather than just finding resistance now at the 50-day. And that's all you're doing is bouncing around the 50-day. And I would not trade a stock simply on the basis of it being Christmas, Christmas play, nah, I don't think so. We're smarter than that. We can find stocks that are moving on the basis of the technicals rather than some sort of theme like Christmas. And besides, if nobody's buying anything and retail sales are as bad as this report says, who's going to buy a camera? These things are expensive too, so I don't really see, Cyber trades 1/3 of its float on a daily basis. Does it bother you that the float in Cyber is so small? What is the float in Cyber? It's not that small. 8 million shares. They got 30 million outstanding. No, it doesn't bother me at all. I mean, you had, 12 million share float, I think, in GoPro for a long time and had a big move. That doesn't really bother me. The only thing I would watch is how many shares they have outstanding. So in this case, it appears that CyberArk has 30 million shares outstanding and 8 million shares floating. What does that tell you? They got shares they can offer on the secondary. And we've seen that happen a lot of times with a lot of these newer issues. 2 or 3 months after they come public, they're issuing a secondary and shooting themselves in the foot. We've seen that with Grubhub. We've seen that with Loco, even GoPro coming out. And although I think they had a pretty nice upside move, so I'm not really going to complain. Somebody says Baba's chart looks like GoPro when? Way back here when it came public. I don't see that Baba's chart looks anything like GoPro. Let's go look at here's Baba. Okay, now you guys can answer this one as a group. Do these look the same? They don't look anything like each other. And the pullback on Baba, if you're trying to say this move is like Baba's big upside move, then I don't know. Maybe you had too much to drink for Thanksgiving or something. Or maybe they put something in the stuffing of your turkey, but I don't really see how they're the same. This is coming and drifting into the 10-day. There is no 50-day yet, but it's holding up on light volume. It looks better than GoPro, so I don't really see that they're similar. But they're both trying to base, but I don't see anything here to buy. If I did, I would be willing to take a position on a pullback on light volume, but I don't see that here yet. Let's see. Somebody says, I've noticed that stocks that trade a large percentage of their float on a daily basis are volatile. That's true. So what does that tell you about how to make money in them? Not much. Let's see. I want to go through some more questions as we flip through my buy list. I've already done the culling process where I've looked at my screens and I've cut out a lot of names. Green Dot, this was looking promising and just kind of blew up. I still have it on my list on the outside chance that it has a re-breakout, but you see some heavy volume here on Friday, and it's down, so not looking that great. Grubhub, here's one, that they came out with the secondary, I don't know, somewhere in here, was it? I don't know. And it's had some trouble absorbing it, but it's trying to come around. You can sort of see here's a pocket pivot off the 10-day line, and it's edging higher. So maybe it's getting to a point where it will eventually absorb the volume and be able to move higher, but I don't see that happening right now, and I'm not going to buy it in this position. That's just a gives me buy index. Home Depot has been kind of a boring name, but it's been going higher, and so it qualifies for my buy list. But I don't know what this is all about. I think there was some sort of weird flash crash issue here, and the exchange actually, I think the NYSE negated any trades that were done at below a certain price, I think. But you know, that kind of stuff, it doesn't really build confidence in the markets, does it? Here's Insys Therapeutics, just basing, going nowhere. Jazz Pharmaceuticals, another stock that can't figure out whether it's a short or a long. I don't see Insys as being voodoo. That's not voodoo. There's no pulling back on drawing it. It should be extreme volume. Seems kind of cheesy. Jazz is trying to be a long here after trying to be a short here, and I don't really trust this one at all. I'm telling you, I think a lot of these things are going to blow to the downside. LinkedIn trying to, whoa, what happened? Here we go. LinkedIn trying to push back above the 50-day. Volume is drying up in here along the 10-day. I don't know, is this thing going to try and go higher? I don't know. I'm kind of looking at this as a stock that could go either way, long or short, and I'd be ready to pounce on it as soon as I can figure out what it wants to do. But right now you're seeing a lot of blue on my indicator bars, so that kind of tells me things are okay for now, but it is slopping and chopping around, so I think it's still a fluid sort of play. MasterCard, this has been acting well along with Visa, but I think the whole payment thing, you know, because we've seen Blackhawk is one that's done well. Green Dot tried to break out and failed, but you've seen Visa and MasterCard, the two big in that area. I think also Fleet, FLT is another one that, but that's got hit on Friday as we saw earlier. And MasterCard trying to edge higher, not any really big volume in here, but it's looking okay. It's trying to go higher, and that seems to be a name that the big money is pushing into. I don't know if that means it's going to have a big move from here, but would have been a pretty nice play on the Bible gap up. Medivation, this is one, you know, had the pocket pivot here, and then as it pulled into the 10-day moving average, it could have been bought, and yet another pocket pivot here on heavy volume, it's edging higher. So that's actually acting well. I don't trust that stock, though, because, and I'll show you why, because once upon a time in its history, I think it blew up entirely. And I mean, you can see, first of all, let's look at this. You can see this break. That's nasty. And I think if you go back, it was one of those biotechs. Yeah, here we go. How would you like to own? Well, how would you like to buy this breakout here? Okay, this is back in 2010. How would you like to buy this breakout? And you're thinking you're riding it, and it's going to go for a nice big launch from here. And then the next day you get this massive gap down, and your stock is suddenly worth almost nothing. That's one of the reasons I don't trust this company, although you can see that since then it's rebuilt and come back. You can see as we progress through time here, it's gone higher. You had the big gap up here, and it's continuing to move higher, a couple of gaps in the pattern here. And as we push into 2014, still choppy and sloppy. It's trying to set up again and go higher, and so far it's succeeding. But that's one of the reasons I don't trust that stock. Mercado Libre, here's another example of Bible gap up. If you're using the 6-day rule, you'd sell here, and it would leave you and go higher. I mean, that's the thing with the markets. All of these old rules, if you try to can something, by using some statistical analysis, and you try to put everything in a can that it's going to do this based on, it's going to do Y based on X or whatnot, it just doesn't work. And what you have to do in this market is use real-time judgment and try to feel these things out to some extent. There's no, if X then Y and you do A, B, and C. That's the thing that IBD tries to sell. And it's even a criticism of our first book, which I think is a valid criticism. If you read some of the reviews on our first book on Amazon.com, how we made 18,000%. It's like, yeah, how did we make 18,000% in the 1990s? We had a parabolic market. That's how. and it wasn't some genius. You've got to be in the right place at the right time, but I don't think the numbers that you make are necessarily a function of some great genius in terms of being a fantastic investor or trader. I think you can improve your techniques and adapt to a particular environment, and that's one of the reasons I like HGS Investor software. It allows me to do that and to test out different things in real time and improve my results by evolving and adapting to the market. My view is the stock market is about one thing and one thing only, which is adapt or die. And some people want to continue going by old rules without evolving with the markets. That's what happened to Livermore. He felt that the market no longer traded the way he was used to it trading. You've seen the futures moving lower, minus 1750 on the Nasdaq minis. But anyways, his systems weren't working anymore, and so he shot himself. My solution, rather than shooting yourself, is to get HGS Investor and retool your methods. Let's see, somebody asks, you referred to your screens. Are those based on the HSI indicators you show? Well, my screens are pretty simple. I just look at what's up on volume. I look at volume dry-ups within my buy list. I keep a list of every stock within a composite rating of 85 or higher, or an ERG rating on HGS Investor of 180 or higher, and I just keep those lists active, and I just continually sift through those and pull names out. It's really, I don't really screen for 6 quarters of earnings up, return on equity greater than 30%, because you look at a lot of names. I know IBD likes to talk about Tesla being a big leader, but the reality is when it started its move, it didn't have CanSlim earnings and sales. It didn't have CanSlim profitability, so none of that worked there. And the same thing with Solar City when it got going around $19 last year and ran all the way up to whatever its high was, 70 or something. So my screens are not based on my indicators, although they do have some canned indicators that look for code blue, things that are turning blue, and they're not too bad. They're built in. Ron Brown put those together for me on the system. So if you get HGS Investor software, you can check those out. You would basically go to, let's pull up the warehouse. See, and this is what I look at every day is this stocks and groups moving to the upside. And I sort them by ERG, and then you can just flip through them real quickly. And I'm going to say most of my best ideas this past 2 years, up 52%. Last year, I keep getting close to triple digits, and every time I back off, I got hit on Twitter and Facebook last week, and those knocked me back a few percent. So, I get close, and then I back up. But, that kind of performance in this kind of market I'm not going to complain about. But what drives a lot of my stock selection is this simple list, and a lot of stocks will show up here that don't fit so-called CanSlim characteristics, but as far as I'm concerned, CanSlim is dead. I don't really use CanSlim, and if that bothers some people, well then you're probably underperforming. That's all I have to say. Somebody says, do you define parameters for these and then screen the market? No, I just use this list. Tesla was on this list repeatedly last year around April. Solar City was on this list last year around April repeatedly, and you see all these names. Gopro, Cyber is where I found CyberArk on this list, and this is all you need. This really is all you need, because you're going to find the leading one, at least a handful of the biggest leading stocks are going to be on this list at some point. So this is all you need. And then what I do from here is these go on to different lists. Another thing I'll look at is I'll just keep track of all IPOs over the last 2 years, and I maintain a list of those. So I have, I'll tell you what, I'll go to that after we get through this. But let's fly through this. I just want to get through the end of this. But I think you're getting a sense, so, a lot of things are kind of iffy. I can't find anything I can sink my teeth into, and to me, that's what it's all about. What I try and do is find big stock type names or dynamic type, new merchandise things that are going to become big stocks that the institutions have to own. Tesla last year, this year, names like GoPro, Mobileye briefly. If you think of Mobileye was a very brief and short-lived thing, and it's starting to break down. Do you buy it in here? Volume is drying up, and you're coming down towards this low. I'd watch for an undercut of this low, probably. Take you back to this IPO U-turn. But it's looking pretty grim. But let's just get through these. Monolithic, another one of these semis that blew apart and then rallied back up to where they were. NXP is another inchworm type stock. But you know, if you can sit through all this, you can make some money, but it's just not my style. Palo Alto Networks, you know, moving higher. It's extended, but it looks great. Maybe if the market continues to rally into year end, that goes higher with it. Rackspace, been doing okay. I know normally our webinars go for about an hour, but I'm just going to try to plow through what I want to plow through here, and we might go over a little bit. Sorry to take up your Sunday, but you can always go watch football and then look at the recording, assuming it all uploads properly. But you know, Rackspace moving higher, Restoration Hardware, it's hanging in there. See, now if you see this strength here, it's sort of a gap up move here on big volume, and then it settles into the 10-day moving average on light volume. That's the sort of thing I would buy into, because I can set a very quick stop here at either the lows of these 2 days here, you know, right, this low, or the 10-day, with the idea that this thing needs to come out of here like quickly. And Livermore used to use time stops. And to some extent, I would say I probably do that as well, but I don't really set a time stop. But if I think something should move from a certain point that I buy it and it sort of sits there, I may just blow it off and move on to something else. So I have expectations for the trade, and if I don't get that, then I'll back away. Rewalk, drying up. You know, nobody's really selling it. We're starting to see a 50-day moving average of volume here, so it's pretty dry as it's drifting down. But if we look at the weekly chart, it's just trying to build a flag in here after this big IPO move, and that's kind of ridiculous if you think about it. I don't know where this thing came public at. See if I can find this. Anybody know? It came public at $12, and then it ran up to what, 44? Yeah, a fourfold move, or almost a fourfold move, and well, make that a 300% move, I guess, from the IPO price. You know, what more would you want? So maybe that's played out for now. Somebody says, are there any particular smart groups you use? Ron uses the GIR. No, I don't like the GIR. That's just not what I look at. I do look at things like the IPO lists and whatnot. I go in and I just play around, you know, and I find I'll just scroll through them really quickly. You know, you can go through this, and let's just get through this real quick, and I'll show you a couple things. Whoops, what happened here? Rex, what is this? Okay, we got to go back to my buy list. Here we go. RF Micro, another inchworm stock, you know, just inching higher. Here's this EYES, Second Sight Medical Products. See, this is why you don't buy IPOs. People are getting crushed on this one. But it's on my watch list because I think it's interesting. ServiceNow, here's another one. Big breakout, runs up. You know, you even get a pocket pivot, I think, in here, right there, and it goes nowhere. You know, that sort of thing, I don't think it's something I want to be involved with. Sierra Wireless, you know, it's hanging in there along the 10-day, but that's done pretty well. If you bought the Bible gap up here, you're doing okay. You're hanging along the 10-day moving average. That looks okay. Skyworks Solutions, another inchworm type stocks, but you know, it just kind of, you know, blows apart here and finds support and then closes mid-range, and then it's just starting to inch higher, and volume is not all that impressive. Just can't get excited. Here's the airlines, and the airlines, you know, they're inchworm stocks as well, and you can see that in Love's pattern, but is this going to lead, is this a Bible gap up that's going to lead to some massive price move from here? I don't think so. So if you want to play this as a Bible gap up, then I guess you buy it using the low of the day at, what is the low, 4107 as a quick stop. It's got all the indicators going blue, and you got an upside kahuna. But, you know, I don't know. This isn't the sort of dynamic name I'm looking for. I think those of you who've been members for a while, and, you know, we've all been, if you've been on the chat room, we've all been rapping together, you kind of get a sense of the type of names that I like. Spirit Aerosystems, another inchworm type stock. You know, where's the best move? The fastest move occurs off the lows, and this indicator is actually not too bad. I call it my washout indicator. I'm not really sure what it, I think they call it something else. Ron and Ian call it something else. But anyways, this thing washed out and went right to the 200-day. The best move is in here through here, you know, and it's really difficult to buy a V-shaped move like that based on traditional methods that O'Neill teaches. You know, you can't buy V-shaped moves, but in this market, V-shaped moves seem to work pretty well. Splunk can't make up its mind either if it's a short or a long. I've talked about this on the basis of the, you know, the big head and shoulders, and is this just another right shoulder? I did short this thing last 2 Fridays ago on earnings up in here. I got it off above 70, 70.30 I think it was, and he broke down pretty nicely. It came into the 20-day unlight volume. I covered it. Now I'm sort of looking to see whether it breaks down here, but so far it hasn't. Data is another one of these that we were looking at earlier. Again, if you shrink it down, you got the big, whoops, you got the big head and shoulders thing. So this is sort of turning into a big pod, but notice the stalling action up at the peak. And that's sort of what I'm watching here. This could be a short in here. That's a possibility. If you look at this sort of wedging higher, you see that? So I'd be watching this could become shortable in here. I think, you know, I'm watching now down 20 on the Nasdaq minis, down 10.50. We're gonna, if this holds up, we may be down pretty good tomorrow. But I think you're in a position to do so based on what I was showing you on those index charts earlier. Take two. Here's the one my son was telling me about right when it's in here, and it's edging higher, but an inchworm stock. Taser acting very well, but being pushed on the news out of Ferguson, Missouri, and also that I guess it was Salem, Winston. I guess is that North Carolina or somewhere in the Carolinas, that is buying, you know, had a big order, I guess 675 of these systems that they have. But you know, you want to buy this on weakness. But look at this outside reversal here, hits the 20-day, and then it bounces off. And if you were brave, you could have bought it there. But I'm not sure I'd buy it in this position here. Tessera Technologies, this one acted well after a viable gap up and has edged higher. So that's been looking good, but not in a viable position. TriNet, you get a pocket pivot here on this particular day right here, and it's holding along a 10-day moving average, but nothing really exciting there. TrueCar is trying to come out of a double bottom, and you can see that you did get a, let's see, 1, 2, 3, 4, 5. No, that one qualifies as a standard pocket pivot. It is a 5-day pocket pivot. Now, something to think about here. Let me use this crosshair. If we go here on this day right there, that's the big volume day. Notice how it closes at the peak of the range. So you might say that's not really, that's more an accumulation day than a distribution type day in the stock. And so you might see that as an up day rather than a down day, in which case this would be a pocket pivot coming up through, what would we be looking at here? Here off the, it'd actually be this one here off the 10-day. But, you know, if you bought that, you'd be diddling around for a few days and now you're trying to work your way higher. But I notice it is drying up in here and it's starting to go code blue. But this weekly bongo, I don't like it when this is turned red and it's staying red. So it may take a little more time. Maybe it pulls back into the 50-day if it's going to try and come out of here. But it's working on it. So let's see. Someone asked, your basic methodology has not changed then. You maintain lists of candidate stocks and then see how they behave, which is where the HSI indicators come in. Yes, that's exactly right. Hallelujah. Tube Mogul. I mean, you know, we were in the, we were talking about this one last month, I guess, and it just ran out of there and holding along the 10-day. They reversed on earnings after a great earnings report, hanging in there. It may try to set up. I mean, if you think about it, this thing came public way down here, I think at $8. And getting up there, it's getting extended. So for it to pull in like that, it makes sense. It might set up again. I'd keep it on your watch list. Oogie Corporation. Or is that just UGI Corporation? I don't know. This one doesn't thrill me. Not sure what how that got on there. Vasko Data Security. This is another one in the cybersecurity area, and there's a Bible gap up. You know, I thought that looked good at the time, and it's continued higher. It's inched its way higher. Viva Systems, another Bible gap up here, but it's way too extended to buy. But that's another stock acting well. You want to watch that on pullbacks. Verint Systems is also a cybersecurity stock, believe it or not. And it's been inching higher, but nothing really spectacular after this breakout. And this isn't the type of stuff that I like to play. When I deploy my capital, I do so in a very heavy manner. So if I can pick off something like a BABA, you know, buy the pocket pivot and run it up to here, and then as we go into earnings, I can be trading it on the way up heavy and coming in and adding, on an intraday basis and getting really heavy and playing the moves and then backing away overnight and then selling out before earnings and then coming back into it when it dips after the earnings report, if you recall that morning when it did, and then get this very sharp move and sell into that. And then, as you know from the webinars about 2-3 weeks ago, I was shorting it around 119, and I figured it would come into the 20-day, and I got a little bit lucky there, and it came right in. So, but I'd like this sort of velocity, and that's what I'm looking for. And you really only need 4 or 5 of these in a year if you can catch them. You catch the fat part of the move, and it adds up very quickly. And that's really the way I like to operate. I don't like to waste my time or my capital. Somebody says, have you bought any BGUs this year? Yeah, I mean, CyberArk was one that you could buy into. I think, trying to remember what were some of the others earlier in the year. I can't really remember offhand, but I have bought some. So, would TTPH qualify as a high tight flag? This isn't going to show up here. Let's go up here. I'm actually pretty excited. In the next few days, the guys over at HCS Investor Software are going to be giving me a beta test version of a new system that actually shows you intraday action and will screen and highlight the volume movement in lists of stocks that you may have. So I can monitor things using the system on an intraday basis. Well, I wouldn't call that a high tide flag, really. Let's look at a weekly chart. So, I mean, I guess if you wanted to call it a high tide flag, you could, but it's only gone up. This is your breakout. It hasn't gone up that much, but it's a flag, and it's held up okay. You pull back into the 10-week line, volume drying up, so that's okay. And I wouldn't really get bogged down on whether you want to call it a high tide flag or a low loose flag or a fat chunky flag or all this stuff is just labels, and they're utterly meaningless. And I think you should get a lot of that out of your head. And I think that's one of the weaknesses in the way IBD teaches things. They make you think that if you can slap a label on something, then that means you can make a trade. And I don't think that's necessarily the case. Somebody says the washout indicator equals a bingo. Okay, so that's what that's all about. But let's look at some other names. I wanted to look at Twitter, for example. And Twitter, I think, is in a bear flag. And what's going on here, Facebook is the big leader in the space, so they get the buying, and Twitter's trying to follow along with it. It had a little rally last week after they announced that they're working on some feature that's going to allow people to get coupons from retail. Like, big deal. All that does is set up a shortable rally. Stock coming right into the 20-day. I think it's a short. Maybe it goes to the 200-day. This is a bear flag. The top of the bear flag is approaching, well, it's roughly where the 200-day is now, but it's, the intraday high here on the gap down day, this high here on this big reversal off the 20-day line. On other news, when they had done their little presentation about how great their business is and they're going to be like Google and grow revenue to, $200 billion, and everybody like a moron gets excited and they just flip it out and the smart money sells it to them. But here you're just wedging up into the line, so I'd watch this. I think it's going lower, but the thing to consider is that you are, even off of this peak, you're somewhat 30% off this peak here, so you've come down a ways very quickly. So this may take some time. You notice some things are turning blue, but again, the weekly bongo is not happening. You do have this, I guess it is called a bingo. I don't know. I like the washout indicator. It just shows it's kind of washed out, but it hasn't really been able to move from here. I still think this is a short into rallies, and it's eventually going lower one way or another. Let's see, what other names? I think CRM is interesting. I actually shorted a little bit of this on Friday because what you've got here is a stock. It's sort of a big, flat kind of pod, just a big, ugly cup sort of thing, and it makes a little handle here, and it fails. And you rally back up to the top of this. If you want to call this a cup with a weird-looking handle, you're rallying back up into this area, and to me it looks pretty weak. If you look at it on the weekly chart, so it's basically a late-stage failed base. And again, here's what Twitter looks like on a weekly chart. But here you see how you have the breakout here, breakout attempt on below average volume or roughly average volume, say. and then you break down on earnings, and now you rally back up into this area here. That looks shortable just beyond the 10-week line, which is not, you know, unusual to see. And I think that's potentially shortable because this has had a long, you know, this had a long move. Let's shrink it down so we can see how long the move is. And this is one of the things I really like about HGS Investor. I can quickly click and see the whole picture. I don't have to change dates or do any baloney. I can rapidly get a sense of where this thing has been and how far it's come. And you can see this thing's had a big move off the 2008 lows. And I think it may be time for it to top, but we'll see. But for now, I consider this as to be a short using the you could probably use the 20-day as an ultimate stop, but my guess is it's going to hit lower tomorrow. Let's see. How about if we look at, you guys want to look at my short list? 3D Systems. Way down there. So not really. Acorn is a new one. I'm not sure if this is going to work, but you can see that you have what might look like a head here, and you're trying to rally up, but you've come up a little bit higher than I thought you would. But maybe this is where you give way and the thing rolls over. And on a weekly chart, you can see the pinhead sort of maneuver here. You see left shoulder, sort of a pinhead. It's going a little higher than the left shoulder, but that's not unusual. But the volume is weak, so maybe this thing rolls over. Something to keep an eye on. Of course, it is a medical stock, so they can always get bought out. Some of these are way down there. Amazon, we already looked at. ARM Holdings is supplier to Apple. I heard something about the Apple Watch is delayed or something. But here's a rally that you're seeing carry up into, if you draw a line along these lows, you know, or a fuzzy line, shall we say, you're wedging up into resistance there, and this might be a spot where it fails. But it's had, you know, a head and shoulders type pattern, but notice how it's never really broken down until recently. So if you draw a big neckline along these lows, that also, besides being overhead resistance, is the neckline. So you get neckline resistance there. So it's coming into an area where it might be shortable. And if we look at it on a daily chart, you see the position here just above the 50-day and around the 65-day exponential. Biogen rally into the 20-day, that becomes very shortable. So here you short it using the 20-day as your stop. Now it could go past and continue up to the 50-day, but you're just getting a black cross up there, 50 days crossing below the 200-day. And you can see how you break down and then you form the bear flag. And when you're looking at bear flags, one of the things to be watching for is a rally into the 20-day. And I find that to be pretty reliable. I mean, as reliable as anything in the stock market, but when you see this rally up into the highs of the bear flag, so you're already established two highs here and here, blow that up, here and here, and you rally into the 20-day here, the volume this week, that becomes a short sale point. Chicago Bridge and Iron, this one I've been watching for a while, but you can see the classic head and shoulders and the breakdown, and you see the resistance right here at the 20-day on this break. It's kind of down there now. I've never been able to borrow it, though, so I've never shorted, but it's been on my list for a long time. Cree, we know all about Cree. Facebook, again, this could be a spot where it stalls out and breaks back to the downside. The only thing is it's considered a mainstay for most institutional portfolios, and if you figure they bought it last year, I don't think they're that likely to sell unless they see something really bad happening. FireEye, you know, we talked about this in the piece I wrote a 3 weeks ago. This was another one along with Data, Workday, Splunk, and Yelp that's in this big, ugly head and shoulders, and it looks like it's heading for lows again. First Solar, the solars I think are toast. You can look at SunPower too if you get a chance. I think we were in a webinar where I called this as a late-stage failed base in First Solar, and it broke down through the the 50-day here, and it basically went straight down from there. That's pretty ugly. It looks like it's going lower. It's a little bit stale, though, as a short sale idea. A lot of these, when they're down like that, you know, the chance that you're going to get another big break after you've had a couple of good breaks, it's not that great, so I wouldn't get too carried away. GameStop is, you know, here's a little bear flag. That's pretty brutal, and maybe this thing heads lower from there. Keep an eye on that one. Gilead Sciences, another big tech or big stock biotech that is in a bear flag and looks like it wants to cut loose. Everything is turning code red up here, so this is looking pretty grim. In this case, the 65-day exponential moving average, the black line here, becomes your, you can use that as a stop on the upside, or the 10-day, which is declining, so below the 65-day there. So Google's to me more a barometer. It's, if you look at this on a weekly chart, this is what it looks like, and you see the big pod. You see this big sort of, I guess it's not so much a pod as it is a big ugly cup with handle, and it's failed. So now you got a black cross here. You're kind of drifting lower here along the line, and you'd watch for any kind of rally in here to short it. I think Google's probably going to top here, and there was some talk, I think, over the weekend of the European ECU wants to break them up, which not really great news for Google. Let us continue through my short sale list. Greenbrier, we already talked about that. This is tricky here because, you know, I look at this, it seems, okay, because you are undercutting this low, it seems to me that you should get some sort of a rally attempt. And if that carried to the 200-day as close as to the 200-day as possible, if you could short it as close to the 200-day as possible on a bump like that, that would be your lowest risk entry point. But these look pretty ugly, and I think things are going to deteriorate for most of these stocks. It's just a question of whether you get some sort of snapback, and you don't want to get whipsawed on it, where you come in and short it, and it jacks back up to the 50-day instantly and rips your head off, even though the overall pattern remains weak. So you got to be careful with that, but the closer you can get something like that off, the closer to the 200-day moving average that you can get something like that off on a short, the better. Juniper Networks, just a kind of ranging doggy stock. Keurig, Green Mountain. Now here's a breakdown, a gap down off the peak. Okay, so a failed breakout. And if we look at this on a weekly chart, you can see that you're actually, this is really the breakout, okay? So you haven't necessarily failed on that breakout, but you have broken below the 50-day moving average, or the 10-week rather, and so that becomes your near-term point of resistance. So if you look at this as a bear flag, you get a little wedging rally up into the 50-day, you could attempt to short this using, say, the high of this day, or this day here, or here, or the 50-day as your upside stop. And the only risk there is that if you hold it overnight, there's always a possibility Coca-Cola comes in and decides they're going to buy a bunch of stock or buy the company. But that's the risk you take with any stock. So anyways, let's continue. Las Vegas Sands has been doggy for a while, and it's kind of in no man's land. Not really interested in shorting that one. I'm looking for fresher type things. We'll get to Workday, which I think is a little bit fresher. We'll see if that one works. I'm not sure why this is flipping over to another chart, but it is. Netflix heading for 131. Hopefully some of you were able to hit it at the at the 20-day moving average, which was here. And you see how that works again? I'm not sure. You can use a 20-day simple, 20-day exponential. Remember, just keep in mind that moving averages are quantized. They're fuzzy zones. But you can see how this thing rallies into the 20-day and just can't get past, and then it breaks down, and I think you're headed for the 131 level here. So that does look good for Netflix, and probably heading lower. Pandora Media, the perpetual dog, P is for pounded, as we like to joke in the chat room and elsewhere, and it has just continued to go lower. Chart will come up someday. I'm not sure why this is doing this, but you can see this thing broken down. It already hit my downside target, so I'm not doing anything with it. Kihu is trying to come back, and I'm not sure whether this is a shortable type situation or not. Whoops, here we go. Trying to come back up. I think you might see if this thing rallies into the 80 area. You can see a lot of overhead resistance here, so I'd watch to see if this thing does come up that high. Otherwise, you got a big pocket pivot coming above gapping off the 50 and the 10-day lines. So that's sort of a pocket pivot, but it's stalling, so it's a little tricky here. Salesforce, we already looked at that one. I think that's shortable here using the 20-day as a stop. Let's see, Cena Corp. Where are we at? It's 4:14 right now, my time, so we'll be done here in a bit. A few minutes. Salesforce, Cena, just getting uglier and uglier. Some of these things I keep on for a while, mainly because I'm tracking them, and they do become examples in the next shorting book I write, which will come out maybe in a few years, but the new one is coming out in April. Solar City is a short here as far as I'm concerned, using the 10-week line as your stop, or you can use a high of the week here, just above 57. But you can see had the big move, came public, had a big move, ran up, double bottom breakout here, runs up, fails here, forms a big, this is a pod with handle because this thing is about 50% deep, and you form a handle, you fail, boom. And we picked this one off, if you guys remember in the webinar, right in here, right around 68, I believe it was, and the thing has blown apart since then. And now you're basically forming another bear flag, or a bear flag rather. It's probably the first one in the pattern, and it looks to me like it's heading lower. If we look at it, and it's trying to hang along here. I think if you got a little rally, a bump from here, you might want to short into that. But it's also below the 50-day line now. So Splunk, I'm watching this one. I shorted this, and again, I'd like to see confirmation of the weakness by seeing it break below the 10-day and the 20-day line. Stratasys, I think, is a short right here. Wait for the chart to come up. You can see you're in a bear flag. This is a big pod, you see that? And you have something of a fractal head and shoulders here. So you draw a neckline along here. You get the rallies up into the neckline and up into the 40-week line, and they're reversing and closing at the lows. So you would look at this sort of action as the inverse of support on the upside. So when when you close off the lows of the week and near the peak of the range on the way up, that's considered positive. Like say, well, this week or whatever on the way up, and on the way down, where you try to go higher and then close at the lows of the week, that's inverse support, or anti-support, as I call it. And you're in a bear flag. I think your resistance is up in this area, probably about 106, 107, and this puppy's headed lower. Let's look at it on the daily chart. Okay, you can see that you got resistance at the 20-day line. So reverses there, outside reversal on heavy volume. Looks like it wants to go lower to me. So data, here's a reversal here. This is another one of these situations that could pan out if I saw a breakdown in here through the 20-day. Usually the 20-day is the one I'm looking at. Here's Tesla that's going code red. It's going lower eventually one way or another. You can try and rally it on stupid news and tweets by Elon Musk. But I think that the whole thing, it misses the major point, which is that the stock is priced for huge sales growth going forward. And it's not clear yet, if you're looking 2 to 3 years down the line, that it's a shoo-in for that. The other thing is, I really think a Tesla car is pretty ugly. I know some people think they're elegant and they like the computer console or whatever, the touch screen or whatever, but you know what? Go into a Maserati, sit in a Ferrari, even sit in a Maybach, in a real luxury car, because the bottom line is my BMW 535i Super Sport, Turbo Sport rather, costs more than a Tesla. And I'd rather buy an i8 than a Tesla. So, I'm sorry, I'm not a white liberal, so I just don't get into the car that much. I'm not a politically correct white liberal, sorry. TSCO moving higher. I'm not sure why this is on my short sale list. Probably should be off, but here's the big head and shoulders, but I don't know why that's up there, so I'll have to pull it off. Trinity Industries, we looked at that already. TripAdvisor, we were looking at this one way back here, rallying up to the 20-day. It's already down a bit, but take that for what it's worth. If you feel like shorting Trip here, 20-day becomes your quick stop. Twitter again, U.S. Silica, U.S. Steel. This might surprise you, but U.S. Steel is looking like this. Well, you guys are troopers. 59 of you showed up, and there's still 59 here out of 501 webinoids, so that's pretty good, actually. Let's see. Here you have, I don't know what you'd call this, a V-shaped late stage base. It's breaking down, but on the daily chart you can see the fractal head and shoulders, if you want to call it that. I don't know. little shoulders here, big head, big right shoulder, or you could see this also as another fractal, head and shoulders, breaking down to the neckline. To me, any rallies back up in the 35 would be definitely shortable. But this is sort of an old line name, but it's tried to turn with the market, and I think it's like way too big a move for crummy stock like this. And what you see here, this is actually not an uncommon pattern. You see a stock, it has a big move and then it tops. Let's kind of shrink this a little bit. Let's see if I can show you this. So it tops, back in 2008, and it's had, it could have been shorted again. In 2010, this is one of the stocks I was short when I was up 85% in 1 month in May of 2010 on the short side. And that's when I think it failed in here on this V-shaped move. So you get another V-shaped move here. But you'll see this happen in stocks that have a breakdown, and then they have a big phase where they rally for a long time, and then they break down again. So they become short sale targets again. You notice how it's almost a 50% retracement. You break down from here to here, and then you retrace about half of that. Now here you've broken down again, and you're retracing, I can say a little more than about 2/3 of that here. So the move from here to here, you retrace about 2/3 of that, and now you're starting to break down again. But you'll see these stocks, they try to come back, but they're just such old, tired names, and the growth isn't there that they'll rally with the market, but then eventually break down. And X is probably one of those slow motion shorts. So, anyways, let me answer some final questions. I did want to point out, the other thing I keep is an IPO list, and and this is up here as well. Whoops, where are we? You always want to keep an IPO list. So as best you can, if you get IBD and they have the list of new IPOs, you just keep that in a spreadsheet or something, and or you can use they have a great IPO list, I believe. Here, let's just go to Smart Groups. Let's see. And there should be an IPO list in here. Maybe there isn't. I don't see it. I'll have to ask them about that. But in any case, you can make up an IPO list by just tracking, recent IPOs. You can probably go on the internet and get a list of recent IPOs off some website somewhere. I've never tried it. I mean, I'll just run a screen, say on Wanda. You can probably do that on MarketSmith. One of the few things that I use Wanda for these days. So, in fact, I'm getting ready to have mine turned off once they get the real-time feature on HCSI going. Anyway, somebody says these Sunday webinars are nice. Would like to see more of these in place of some of the Thursday webinars. My thinking is that a non-real-time webinar is probably of more value than a real-time one, because there's a lot of noise going on intraday. And I've noticed a lot of times in the morning we'll do a webinar, and what I'm thinking in the morning, by the afternoon that shifts entirely. And that's really what trading and investing is all about. What you think today may not be the same thing you think tomorrow based on new evidence, and what you think this morning may not be the same thing that you think in the afternoon. And so once the market's closed and you've had a day or two to catch your breath and review things, I think there's a lot more value in looking at things that way rather than the craziness of the intraday action. So yeah, we'd like to have more of these, I think. So maybe we'll do that. WTI crude drops below $65 a barrel for the first time since May 2010. That's good. I'm still short silica, so I hope it goes lower. Gold down over 2%, oil below 65. Oh yeah, let's go to WDAY. Whoops. Here we go. Workday. Why isn't that on my short list? I'm going to have to... here it is. See, Workday... first I want to look at the weekly chart. So again, this is a pattern that it's had a big move. You can see the big move here. Nice big upside move. So it's had a huge move. And now you're coming back up to the highs of that move. In what looks like, you'd say this is about 45% deep, if I'm eyeballing this correctly. Correct me if I'm wrong, but you chop your way higher. You notice as you move higher, there's a general pattern of declining upside volume. And so you pretty much have one of the lightest weeks in the pattern here. The last time you had a week this light, I think, was right in here and stalled around. But here it's near a peak. So it gaps down after earnings. And so in this position, you've gapped through the 65-day exponential, but you basically busted the pattern here and gone through the 20-day here, and now you're in a little bear flag. So my thinking is this thing is probably going to head lower. Somebody over the weekend wrote an article on Seeking Alpha, which I have to say, there's some usefulness on that site, but I got to tell you, they let anybody write anything they want on there, and there's so much garbage. A guy giving you a big fundamental breakdown of Netflix and why he's dollar cost averaging on the way down. I mean, come on, are you a moron or what? That's the same argument. The fundamental argument was what they were using against Netflix on the way up to short it. It's like people don't understand trends. They think that they can be smarter than the market and outthink the market, but you don't have to. It's like trying to outthink the ocean. I'm gonna surf out into the ocean rather than surfing the waves coming in, and because I'm smarter than the ocean. Ocean doesn't have a brain, right? So that's what people are doing. And so you get some idiot over the weekend talking about how Oracle should buy Workday, just like somebody should have bought Pandora and someone else should have bought Yelp and all this other BS. So if there's any kind of blip on this thing, I'm just going to trash it and just dump a bunch of stock on it and short the heck out of it. So on tomorrow, but somehow we'll see what the futures aren't doing so hot, then maybe not. But this gap down on huge volume, that's not constructive. That's not positive. If it turns around and goes back up, that would probably be the least of the probabilities in terms of where it's going from here. But it could track sideways for a little bit. But I would still use the high of the day here on this gap down day at 88.95 as a potential stop, or a tight stop. Anyways, that's all I've got for now. I'm going to answer a couple of questions and then sign off. Is your short list generated in a similar fashion? No, I generate my short list by watching for stocks on my long idea list, or my buy watch list becomes my short list when the stocks on my buy watch list start to break down. So let's just use an example here. When this is gonna. I mean, if Tesla was on my buy watch list on the way up, okay, once it breaks down like this and starts to form this, now it goes on my short list, my short watch list, because we go after the prior leaders in each cycle. Does HDSI reveal the algorithms for their indicators? No. You ask them. I mean, I don't even really need to know how they derive them. So, Fizzler was a nice short. Somebody got picked up on that, hopefully. With so many possible shorts on your list, how do you narrow it down further in order to make your final selection at which ones to go after? Well, generally the one that's in the best position. It's like anything else. You sort of got to try to optimize in terms of where is it on the chart, where do you think, which has the lowest risk entry point, which is acting weaker. So, generally I'll come in every day with a good 4 to 5 solid ideas on the short side and maybe a handful on the long side as well that I'm trying to work. But sometimes it's a matter of, say, if I've got 5 ideas, I'll short 3, and one of them doesn't work, so I blow that out, and then I go after the other 2 if they start working. So a good example would be on Friday, short silica right on the opening at 38.10, around 38 on the shortable gap down through this neckline area. Sometimes you can draw a neckline if you want to draw it along here, or you could use this, since this is an area of support too, this could be considered sort of a pseudo quasi neckline. And so let's say if I go short this one, and let's say I go short Twitter, and Twitter's pushing me, and that one is going to the downside, I just take this money and throw it at that one, throw it at silica. But there's no black and white method for determining which one you're going to go after. I have a handful of ideas. Watch how they act in real time during the day, and then rely on my experience and my ability to discern the technical action in real time, essentially tape reading, if you want to call it that, to determine what I'm going to go after in size. And I'm not always right. Sometimes I'm wrong. But when I'm wrong, I'm not wrong for long, and they don't hit me with big losses. I'll take quick losses. In a position like I'm at now, being up as much as I am for the year, my general rule is that I won't let any single position cause more than 2% total damage to my overall portfolio, because I'm trying to keep things tight, because the last thing I want to do is blow all the money I've made this year. or a significant portion of it. And so I'll do that. That's one of my sort of stop-out rules. But I think you just develop better judgment over time, and there's no real black and white way to go about it. Somebody says, why a short after, why I think is a short. In fact, I wanted to short this turkey, and I tried to borrow it, I think it was last week, either Wednesday or Thursday or something, I forget, or well, Wednesday or Friday. This would have been Wednesday. Can't borrow it, but it looks to me like a head and shoulders, so you can see the pattern pretty clear. So yeah, I mean, if you wanted to short, it's under the 50-day. Shorter here, use a 50-day as your stop. Let's see. Somebody says under M and K. What is M and K? I'm sure it will. Under Morales and Kacher. IPOs. Well, there's a pocket pivot IPOs there. That's a screen. There's nothing there. Wait a minute. It's taking some time to come up. Anyway, somebody says Sunday webinars are great. Well, that's good. If you have a need for speed, test drive a Tesla P85D. I say if you have a need for speed, test drive a Maserati. I'm sorry, Tesla's just a cheap imitation of a hot car. It is. I mean, come on. If you get enamored with the fact that it's an electric car, screw that. I'm sorry, nothing beats a Maserati. I think Maseratis are hot, and I'd buy one if my wife let me, but that ain't happening. Anyways, I don't see anything, but I guess you could look at that list. But I say get HGS Investor software and play with it, and I think it's a fantastic tool, and hopefully you guys get some sense of how I'm using it here. But hopefully you've gotten some ideas for tomorrow, for the week, and know what to look for. There's not a lot I see on the long side. I do consider, one of my primary long targets is BABA, depending on how it pulls back. So if the market's strong going into year-end, that's probably one of the main focus of what I'm looking at on the long side. Palo Alto Network's another one, although it's somewhat extended, maybe getting a little bit late stage. CyberArk is pulling back, so I'm watching that. I only need 2 or 3 of these, and that's really all I'm looking for. But I think BABA is definitely the name that is a big stock leader here, and it's really going to depend on what the general market does from here. So, anyways. A lot of good comments here. Okay, so I'm glad that you guys got something out of this and you like this a little bit better. So I'll try and do more of these in the future. Although, come on, it is the weekend. I do have a life. Anyways, you guys, thanks for showing up. We're going to put this up on the website as soon as we can, the recording, and we'll catch you guys later this week, all right? Take care. Bye-bye.